Hey everybody, today there has been a 1/4% reduction in the interest rate by the Feds that was long sought by President Trump. And here with us to discuss that is Mark Collinsworth, who is the Chief Investment Advisor at Global Investment. He's a portfolio manager. So, Mark, this was long sought by Trump. In fact, he was pressuring Jerome Powell, the chairman, to do it. So, is this a result of Trump's pressure, or was Powell going to do it anyway? Is it a win for Trump? What do you think?
Thank you, Larry. I don't. My personal opinion, I don't think Powell would have done this if he hadn't gotten so much pressure from Donald Trump being threatened to fire and everything. And the reason I say that is because they only did 25 basis points cuts this meeting, and Jeremy Powell kind of hinted around that there might be another 25 basis points this year, might be to not having any, which that's called the stock market sell off earlier today and then it rebounded. So, but if you look at the dot plot, which the dot plot is where each Federal Reserve governor gets a chance to make a guess at where they think the Fed funds rate is going to be in the next, 12 months down the road. And if you look at the dot plot, most of the Fed governors think the Fed funds rate is going to be trading, somewhere around 3.5 by this time next year. So what Powell is saying and what the Fed governor's dot plot saying is two completely different things.
All right, so for the layman, I'm trying to get this all straight. 25% basis point, a 1/4 of a percentage point reduction, and perhaps more in October and December as well, correct?
Well, according to the dot plot, yes, but according to Jeremy Powell, probably not.
Was this put aside the pressure from Trump? Should he have done this? Now, when we talked about this before, you had some misgivings actually about cutting too much too fast.
Hmm.
So was this a well thought out decision or just a cave into to Trump's political pressure?
I think it's just a cave in to political pressure. Because one of the things I've noticed is like on the job market is actually they've done a lot of job revisements. You probably saw where Trump actually fired the head of the labor department several weeks ago, and that's because they've done so many revisions to the labor numbers. The job market has not been anywhere near as strong as what the numbers have suggested, and so because of that, I think 50 basis points was probably more warranted. But he gave the bare minimum because people were pushing so hard for 25 basis points that he caved to 25 basis points.
So was it the right thing to do? Even at 25 as a help, it would have been better at 50, but there should have been a cut. Is that what you're saying?
Correct. I think there probably should have been 50. And probably the main reason whenever the Fed cuts interest rates, it takes about 6 to 9 months for that rate cut to fully soak its way into the economy. So if they cut 25 basis now, you really won't be getting the maximal effect of that 25 basis points until several months down the road. And don't forget, we got Christmas right around the corner.
All right, so if they cut more in October and December, maybe 25 basis points, maybe more, how soon would that fix the economy? Or, what kind of a fix would it provide for the economy? How soon?
Well, that's kind of, a question of semantics. It really depends on how bad the economy is and what's actually causing the economy to slow. With us going into the Christmas shopping season, Black Friday and the shopping holidays actually gives a nice little boost to GDP.
Right.
But in this scenario, I don't think there's like a quick urge. I get I'll back up. My biggest problem is I don't think there's a quick urge to um, cut interest rates, but I do see that they're not going as quickly as they should. They really should have been a 50 basis points should have been a day, but they pushed it out to 25 basis points at the minimum. And with the economy slowing like it is, my concern is do they go too slow at cutting rates and the economy actually falls into recession, which once you get to recession, you have to be even more aggressive on cutting rates and other stimulus.
So, is Powell just being stubborn? Is he not seeing the economy the way it works correctly? I mean, why isn't he cutting more? Does he have any justification to be cautious and cut just 25%? And even that, I think, was grudgingly. So is he right, wrong, what?
I think Powell's probably wrong. I think they should probably be just a tad bit more aggressive on cutting rates, or at least the bare minimum they should be talking he should be talking much more aggressively on actually cutting rates down the road because The Fed actually has two weapons in its arsenal. It can talk about cutting interest rates or it can actually cut interest rates. Simply talking about cutting interest rates has almost the same effect because it drives down bond yields, which the mortgage, the 10-year treasury bond yield is actually tied to mortgage rates. So if you talk about getting rates lower, that's going to automatically make the 10-year treasury bond move lower.
All right, let me ask you this. Trump has accused Powell of playing politics before, helping Biden with the rate cuts to boost the economy before the election. So is this an example of him doing just the opposite to hurt Trump? In other words, was he playing politics, or in his mind, was it really justified what he did to keep it to a bare minimum?
Well, in my opinion, I think he's playing politics. That's just like, last year they cut 75 basis points right before the election. And one of the brokerage firms had actually done a study on this going back. They had 12 economic indicators that they had looked at. And of those 12 economic indicators, I think the Fed has always cut interest rates when at least, I think it was like 10 of those indicators were in the red for the Fed cut interest rates. This last year, out of those 12 indicators, only two of those indicators were in the red. So, why did the Fed, for the first time in history, cut interest rates when the indicators that they follow, the majority of them were not in the red? I just don't understand that.
Well, because Trump has been putting pressure on Powell and being very vocal about it, even to Powell's face when they met a few a few weeks ago. Um, Trump is being accused of politicizing the Fed, of taking away their independence, and he's also going after, who is it, Cook, another Fed governor that he wants to resign or he'd fire if he could. So should he plead guilty that he's politicizing the Fed and removing its independence?
Well, that's a funny. I don't think the Fed is that independent, and the reason why is because your member banks, which is technically, the big banks like J.P. Morgan, they own stock in the Federal Reserve. They get paid dividends from the Federal Reserve. So your stock owners, Bank of America, Citigroup, J.P. Morgan, the other banks, and there's a lot of banks that are member banks that actually own. Um, that's how the Fed actually gets its money to actually go in and invest in the economy is because of all these member banks that have bought stock in the Federal Reserve. If you own stock in the Federal Reserve, you're going to have some kind of say so in who you put in certain positions, and you're going to have, to a certain degree, have influence on what those certain people do. So, with Jeremy Powell not being aggressive on cutting interest rates, that kind of sends an indirect signal to me that your bank conglomerates that are actually the member banks really don't want to see interest rates fall that quickly. And the reason why is because your big banks, if the big banks are making money, and everything's going well right now, why do you need to really cut interest rates to help out the bank's profits?
Actually, what effect did it have when they made that rate cut this Wednesday? What effect did it have, the immediate effect on the markets?
Well, the markets didn't really react because we now have Powell's conference call is a lot more important. But during Powell's conference call, the S&P dropped almost what I think 75 basis points at one point, uh, and then it rebounded towards the end of the day after he started speaking. But the big thing is we have options expiration, which is going to be quadruple witching coming up on Friday. You're going to have nearly $5 trillion worth of options are going to be expiring on Friday. I'm going to be very curious to see how those option contracts play out between now and Friday.
All right, so what do you predict will happen in October and December? How much of a cut will there be? I mean, they've signaled that there's probably cuts coming in October and December, but again, how much of a cut?
Right now, I'm going to stick probably at 25. Right now, based on the data I've seen and based on what Jeremy Powell said, I'm going to kind of lean towards 25 basis points.
For both October and December?
Well, probably just for, I think probably October is probably you're looking at 25 basis points, and that might be it.
So, on top of the 25% cut, basis point cut this Wednesday, how much how much of the market will be straightened out because of those two cuts?
Well, whenever the Fed cuts interest rates with the stock market's already doing well, that usually just makes the stock market do even better because you have all that liquidity now coming into the stock market.
So, even these minimal cuts is heading in the right direction.
Heading in the right direction, but at a very slow pace. And again, that's the problem. If the Fed is too slow, it may get out of control. Just like when the Fed started cutting interest rates for the housing bubble, They were very slow on cutting interest rates until they realized, oh my gosh, this now has gotten out of control, and then got very aggressive. But the very aggressiveness was too little, too late.
Yeah. In fact, Powell had said when he made the cuts on Wednesday, he said it's really a risk management move. So even that, he was, couching it very cautiously.
In my book, when he said risk management, what's really saying is I'm trying to give Trump what he wants so I don't risk losing my job.
Very good. But as you said before, Trump cannot fire him. He doesn't have the power to do that, correct?
Correct. Under the Federal Reserve Act, you can only remove a Federal Reserve governor if they have actually broken a law or have conducted in some kind of major misconduct. As of right now, I don't see Powell has broken any laws or has acted in any kind of notorious misconduct.
Well, Trump and his supporters were hinting at the cost overruns of the renovation of the Fed building, even though
Mhm.
it's not federal money. Can Trump make a case that, it was wildly mismanaged, badly mismanaged by Powell? So therefore, if he can't manage the renovation of the federal building, gross overruns there, how could he manage the economy proper? Can a case be made of on that to remove him?
Well, I'm going to say no. And the reason why is because the Federal Reserve is a private entity. It's just as a private entity like, Apple, IBM, Exxon. If Apple spends more money than it anticipated on a project, Donald Trump can't go in and fire the CEO of Apple Computers, can he? Same thing here at the Federal Reserve. And Jeremy Powell knows that. Jeremy Powell can basically say, hey, you can't do jack. And he can't unless under the Federal Reserve Act, unless Jeremy Powell conducts himself in a commits a crime or acts in misconduct, there's no reason for him to fire him. So right now, Donald Trump has zero power to fire Jeremy Powell.
If the cost overrun was what, tremendous? What was it? $500 million or something like
It
that?
was, I think it was close to, was it almost what, 700 million or something?
Yeah, it's tremendous.
Almost close to, let's say just round it up, say a billion.
Now, if it's discovered that there was money going south, there were deals being made, that would account for the cost overruns. That would be cause, wouldn't it?
Correct. That would be with cause if you could prove that there was like embezzlement or there was potential increases in prices or there was kickbacks or something going to the Federal Reserve members like Jeremy Powell, then you could make an argument of misconduct, which would fall under the Federal Reserve Act and actually fire Jeremy Powell.
Well, that remains to be seen. Now, he's also after, what's her name? Cook, another Fed governor, uh, trying to get her to step down, correct?
Well, correct. And that's the case. And I think the issue there is, of course, she's been accused of mortgage fraud. And of course, Trump tried to fire her on the alleged mortgage fraud, but the courts came out and said you cannot fire her because technically she has not been found guilty of any crime. So, innocent until proven guilty, until she goes to court, which might be year, 2 years down the road, and she's actually found guilty. Trump has no power under the Federal Reserve Act to remove her.
And that was her personal mortgage, wasn't it, for which residence it was applied to? What was that about?
So when these people are committing mortgage fraud, what they're doing is when you live in the house that you live in, you get a lower interest rate. If you own a house that you're going to use as an investment and you're going to rent out to people, there's a slightly higher interest rate. Well, you cannot claim two houses or three houses as your residence in different states because you can only live in one house, right? So technically, when you do that, that is technically mortgage fraud because you're saying, well, I live in these three houses when you know, to get a lower interest rate when you know you're only living in one.
From what we know about it so far, is there a strong case for mortgage fraud applied to her?
Based on what I've seen, I'd say there's a very good, of course, this is just based on the information I've seen. I would say there's a very good chance that she probably did. But here's the issue: we don't know all the facts. There may have been a legitimate reason. And in a lot of these situations, mistakes happen. So was it just an honest mistake that the bank messed up or there's a miscommunication? In a lot of these cases, a lot of times it's very hard to prove these kind of instances unless it's just an overwhelming amount of evidence against the person.
And so it goes. All right, Mark. So wrapping up this segment, what do you see? Again, one of my favorite questions for you. It's hard to predict ahead of time, but In the next year, are we going to be in better shape, about the same shape, or worse shape in terms of the economy about a year from now?
Well, actually, well, I think the economy is probably not in that great a footing just because of all the revisements they've done over the last several months. That the job growth they've been touting, that job growth has not been as strong as they've been saying. And I think a lot of that just simply is because for some reason, this younger generation just doesn't feel like working. They like to play video games and do this and that. So I think the economy is not that great. I'll use a great example here. When I was in high school, I was, when we were still in the Great Depression, I went and talked to my grandmother who grew up in the Great Depression. And I asked her, what do you think about the stock market crash in the 1930s and how poor were you? And her response was, I don't know anything about a stock market crash. And I really don't know how bad the 1930s were because in 1922, I was just as poor in 1922 as I was in 1932. So I didn't care anything about a stock market crash. I didn't care about what's happening in the economy because from my standpoint, absolutely nothing changed. But what's interesting about that is even though my grandmother said that the economy is doing terrible during that 10-year period, stock market still ran up several hundred percentage points.
Yeah, yeah. So, I mean, the winners and losers were who?
The winners were the people who basically bought stocks and were able to get out of those stocks before the 29 crash.
Right, right. And in fact, isn't that how Joe Kennedy, the father of the president, made his fortune?
Correct. Um, as the way the story goes, is a shoe shine boy that was sitting out in front of the New York Stock Exchange was giving out stock tips. And according to the legend, Joseph Kennedy was basically getting stock tips from him. And he's like, gosh, this shoeshine boy has got better stock picks than the stock picks I'm doing, and I'm a professional. Maybe that's time for me to get out of the market. That's how the legend goes, how he got out of the stock market. Hmm.
All right. Mark, the investment advisor, chief investment advisor with Global Investments, thanks for joining us and for this interesting analysis. See you again soon.
Anytime. Thank you, Larry.